Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. In today's Stock Market Live, we're going to talk about Jerome Powell. We're going to talk about the FOMC and whether or not they should just rip off that Band-Aid and actually raise interest rates a little bit more than everybody's expecting. As of the moment right now, it's expected to be 3/4 of a basis points. Last time I looked, it was around 80% higher than 80%. We're actually going to do a little something different today. We're actually going to dive into this, where we're going to break down the minimum viable criteria for looking for the best stocks to buy now. If you have been watching the sector rotation over the last week to month, last 21 days, however you want to rattle off that month, everything is red right now. And that is usually an area where we get capitulation. Now, today's a little bit different in the stock market crash that we're experiencing right now, resting right at that average true move where the SPY, the S&P 500 went down and stopped right where we said we expected it to. But that was just a pause before the next move. So what we're going to interestingly look at today is the FOMC and that 3/4 of a basis points and Jerome Powell's speech today already priced in. And will we get a little bit of a stock market rally after the announcement today? The one thing I can tell you, and I really, really hope that you did this, is it's not hard to make money when it's obvious. It's a question of not over trading when it's not obvious. I know that's a lot of negatives in there. You're not supposed to, my English teacher would say, don't use all those double negatives. The bottom line is this: if you were patient the last few days, especially the last few days, and you preserved your capital, after the FOMC and Jerome Powell announced today, we should have some amazing opportunities. Now, I know a lot of people do not like to short sell. The downside of the market is scary. It's a lot of times people just don't understand, or quite frankly, don't want to. So what we're going to do today is we are going to map out some minimum viable criteria and what it should look like before you even consider looking to buy stocks. So now, obviously, the market has been down. And I just want to give you some context for what that looks like. So if we hop on over and hop into our FinViz board, right? Obviously, that's what the rest of the market looks like right now. And look at that, the lone star right there, Apple. But I think this is the most dramatic picture right now, where all of the sectors across multiple timeframes are beat up pretty darn good. But we're going to start to find some opportunities. We're also going to take a look at what are the best stocks to buy now when the Fed raises interest rates, if the market starts to continue to the downside, if the stock market crash of 2022 accelerates to the downside, what pockets of opportunity and or individual stocks should we be looking for? But that's only the first part. The second part is then it still needs to meet the minimum viable criteria to put on a new trade. And I'm going to walk you through what that looks like today. So, man, we got a lot to talk about today. I'm really excited. I'm really jazzed up. Stick around. Be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. We've got a bunch of stuff we're going to talk about today. I want to say hello to my pals. Don, good morning, Don. Lewis, always love seeing you here early in the morning. Eduardo was just in a boot camp with us. Thank you so much for being in a boot camp with us, Eduardo. Really means a lot to me. And, of course, my buddy, Minvai, Andrew, and John. John, I think, is our #1 YouTube contributor. I actually appreciate everything you do here, John. So we're going to get right into it. I'm going to actually start out with the main topic of the day, which is obviously Jerome Powell, the FOMC interest rate announcement. Is it going to be 3/4 of a basis points? I'm pretty sure that's locked in, but there's other stuff that's going to be really important today that's unusual that it's also being announced today. So something from Wells Fargo today was super interesting, which was this: should the Fed just rip off the Band-Aid and do double the amount that is expected? Now, I think all of us can actually admit that that's probably a little bit exaggerated to get that headline click. They're not raising it 1.5. There's not a chance that's going to happen. However, what is your opinion on whether or not they should be a little bit more aggressive? If they are more aggressive, they will absolutely spook the market. One of the biggest things that we talk about inside of our community as the market is going down is whether or not it's orderly or panicked. Panicked is when you get those big 1,000 point down days in the Dow Jones Industrial Average, like we had actually when the CPI number came out. There's interesting moments where you don't really want panic, but there is a certain type of trade that we call exhaustion. And exhaustion is when you get a big, fast move in one direction, followed by gigantic candlesticks, and massive volume. Now, if you don't know exhaustion, a lot of people know it as cleanup prints. Some people know it in our universe. We call it exhaustion. It could be called capitulation. What exactly is happening on the charts when that happens? Well, what happens is you have this buying pressure that happens over a 3 to 5 to 7 day period. Now, I'll actually show you that a little bit. Let me actually zoom in on a chart from yesterday. And first, we're going to take a look at this futures. The futures are actually up right now for the moment, right? But what I do want to show is I want to show you a chart of a stock that we've been pretty actively trading, which has been the casino stocks, which have actually been really rallying pretty good. 58 to 70, a 12-point move and win is actually pretty interesting. But here's the big thing that I want to get across, and this is very relevant to the current price action because there's a chance we're going to see a very fast move to the downside in a lot of stocks over the next couple of days if the language that the Fed comes out with and Jerome Powell kind of doesn't say what the market wants to hear about going forward. There's a chance we're going to see what's called exhaustion. Now, what's interesting, exhaustion is a very specific tape reading setup where there's a combination of price action and volume, and you put those two things together, you end up seeing the end of a recent move. So let's actually use let's use Glenn as an example. Let's say Glenn has 5 million shares to buy, and he's buying win over that same time period, right? So over the last 5 days, he's in there and he's picking up some win. And then what happens is Glenn's got 1 million shares left, and he knows that every time he slows down, the stock starts to pull back. So he knows that he's the only buyer in that stock. So then he calls up his buddy Rose Flores, and he says, Rose, look, I have 1,300,000, maybe 750,000 shares left of win, and I need to get rid of them. Please, will you take them off my hand? This happens all the time I know, old school, right? Picking up the phone and actually calling somebody, and they negotiate a price for that. That is what's known as a cleanup print. We call it exhaustion because it's the exhaustion of that most recent buying power. So what we actually happen to have seen yesterday in win after this $12 move to the upside, and this is more of a day trading thing, but when you start to notice these kinds of spikes, that's what you pay attention to. So we actually called this out in our community yesterday. So one of the biggest things you need to understand is first, that setup of exhaustion has to be preceded by buying or selling pressure. It could be over a couple of weeks, but it's kind of fun when it's over like the last 5 to 7 days and the stock has moved a little bit further quicker than it normally does. So you know that there's actually what's known as a natural buyer in there pushing that thing higher. So what happened yesterday is we actually called this out where this spike right here, and you can actually get a pretty good example of it. Let me actually bring this in here. You need to know where this spike happened, which was right there. So when this spike happened, let me actually bring this in with a vertical line and right there. So right there is where that volume spike happened. Now, what do you need to know about that? First, the setup, and I'm bringing this all the way back into what we're talking about with what's happening with the Fed right now, because it matters. This is all going to actually play into how we're going to set up some new trades. So we have the 5-day rally in win to the upside. And then yesterday, as we're watching it and reading the tape, we see this massive spike in volume. So we called out exhaustion in win yesterday. And the two things you need to know, number one, when you see exhaustion, that doesn't mean you just get in, because we usually get what's called a bullish echo where we get a little bit more follow through in that direction. But you need to mark off where the exhaustion happened. So again, Glenn had shares to buy. He sold them to Rose. Good morning, by the way. Rose called you out on YouTube this morning. When that happens, you need to mark that price down, okay? And generally speaking, we could see it best on these shorter time frames. So that price right there is the price that matters. Now, you don't just get out of it, but you can see that it went a little bit further. Once you know that price, in this case here, 69.69. So it happens to be a pretty significant number. If you happen to have been a buyer of win following Glenn's buying pressure to the upside, well, you need to know when Glenn is done. We get that question all the time, is how do we know who's buying? Who cares? All we care about is that it's going up and the order flow is obvious. Remember, the two biggest things that we talk about is the order flow obvious, and how do we know if it's still valid? And how do we know if the order flow has changed? So that last part, is it still valid and has it changed, is tape reading. It's a part of tape reading. There's a lot more to it, but that's a part of it. So once you mark that off, and if you happen to be long that idea, now you need to know, when has Glenn finished based on the exhaustion, and how do I know when to move up my trailing stop and maybe even get out of this position. And that's actually what we ended up seeing right here when we cracked that number where the exhaustion spike happened. And this level right here is the spot to have exited that position. So why is that so important right now? Why did we go through that whole big story? Because there's a very good chance that over the next couple of days, we might get a little bit heavy selling after the Fed comes out today. Jerome Powell might say something that makes the market go, oh, we didn't like that. But we need to now see that on the opposite side of the market for buying opportunities. So the same setup that we just saw in Win on the way to the upside, we will typically see that on the way to the downside where we get these big red candles. Now, we're actually going to tie that into this, okay? We're going to end up most likely seeing well-offered candles. And well-offered are the beginning stages of stacking bearish order flow. However, when we end up seeing well-offered candles with heavier volume, that's the thing that we're looking for right now, heavier volume. If the market over the next couple of days and you take advantage of some short selling opportunities or buy inverse ETFs, they go up when the market goes down. If we see well-offered candles, and let's go to the other side of the market now. Let's say that Jason is a big short seller in the market and he's got a lot of stock that he's dumping and dumping and dumping, right? But then all of a sudden, David steps in and he's like, all right, you know what? I like this area down here. I like the support. I like it as a, whatever the stock happens to be, a value play down in that area. They start to have a conversation now, and Jason gets rid of his entire order, buys the other side of the trade from him. David buys it, and we will see a large volume print on the downside, and this is very important, with these big candles. So that's exhaustion in the other direction. So what we're actually doing right now is we are setting up trades that might not happen until Friday or maybe even Monday or Tuesday of next week. So we have to now, and again, I don't say this lightly, this is where trading becomes fun, because now when you know what you're looking for, you're never lost again. So we're just going to be looking for, when I see exhaustion and mark off that price and knowing it's reversed, that's when we start to say the short-term bottom is in, and we can start to look for some opportunities. Now, I can hear what you're saying. You're like, well, I don't want to bottom fish. Everybody knows you're not supposed to buy on the way down. That's only step one. So we're looking for the Fed, Jerome Powell, to come out today, say what they got to say if the market goes down, and over the next couple of days, we get these kind of big red candles, right? This could be opportunities to be short selling. However, that's not the go get them signal. We need the opposite. So the first thing you want to write down is big red candles with large volume. Now, if we see that over a 3 to 5 day period, and then the last candle, let's say yesterday's candle, is this giant red candle, you got all these bad headlines everywhere and massive volume. Now, I'm talking about in individual stocks, more specifically, not so much the SPY ETF of the market, but what we'd be looking for is those giant red candles with lots of volume. Now, this is after it's already come down 3 to 5 days. I want to be clear about that. When that happens, that's kind of like an alarm going off and saying, okay, the traffic stopped, something changed. Now we're going to look for a buy signal. Now, what we're going to talk about now is the minimum viable criteria before we start to say I'm looking to be a buyer now. Now, we're talking about stocks that are already strong. We're not talking about stocks that are getting hammered. We're talking about stocks that have some bullish order flow. So obviously, if you've been with us here for the last, whatever time period that happens to be, we're going to be talking about some stocks. We could even use Tesla as an example. Tesla is actually near a breakout level. If Tesla pulls back and gives us that big volume spike, we'd be only looking to do this in stocks that have been strong. So you need to first have a list of stocks that are strong. Now, actually, you want to take a screenshot of this. I'll actually give you this right now. So when you're doing your research and we're working our way through the list of stocks, you can see that sector specific, there's not really a lot of stuff to love right now. However, there are some stocks that are what we call in bullish harmony. Bullish harmony means that they are consistently showing buying pressure. And this is the list that we're looking at right now, right? And I think even Starbucks right now is actually near the top of that breakout list right now. So what's interesting is we are now looking for a particular setup, and we are looking for strong stocks before that setup happens. So we're actually technically looking for stocks that have relative strength. So the question now is, what is the buy signal? If these strong stocks pull back, give us exhaustion, we see that big red candle with a big volume spike, when would it be okay for us to say, okay, now I'm going to start looking to bid for those stocks? I'm going to first start putting on my initial position. That's the next and opposite signal of what we just talked about, which is well bid. So if we're talking about these kinds of candles where we're looking for exhaustion, which is that big push to the downside, right? What we're looking for now are this guy right here. So well bid is higher highs, higher lows. If you can combine well bid with increased volume, now we have some proof. Remember, there's no reason to bottom pick. What we're looking for are setups that tell us, is the buying or selling pressure still valid, which is order flow, and how do we know when it's reversed? So exhaustion, again, I just want to repeat this one more time. It's very important, is after you have a move, 3 to 5, sometimes 7 candles in a row, where the last 2 candles have expanded bodies, big red or big green candles, and those last 2 candles have larger volume than normal. Typically, double normal volume is very important. So if you see when we run our scans every day, just to give you an idea of how we actually break these down, let me actually bring that in the picture for you. One of the most important things you could run in your scans are when stocks have double normal volume. Those stocks have something going on in those ideas. So when you're looking at those, you are looking for fuel, which is a breakout from a consolidation, or you're looking for exhaustion, which would be a sign of a reversal of that recent buying pressure. Now, we just showed you that sometimes they continue in that direction. You don't automatically get out or start trading in the other direction. You need feedback. You need the market to say, okay, not only was that selling pressure in this case done, now we want to see now buyers, smart money, institutions step up, hold a higher low, and pay higher prices. And that's what we see over here on well bid candles. So what's kind of fun about this is we have actually just mapped out the next 5 to 7 days of what we're looking for in our stocks before we feel it's kind of okay to get in there, because we have feedback from the market that tells us selling pressure, exhaustion, well bid, and now we look for opportunities. But all of that is preceded by whether or not those stocks were strong in the first place. You do not want to be buying exhaustion in stocks that are getting hammered and have bearish order flow. You want to be buying stocks that are up here that have relative strength. So if we can give you a little bit of an example of some of the stocks that meet that criteria right now, we obviously just talked about Starbucks, right? I'm not even on the screen. We obviously just talked about Starbucks, right? That's one of the ideas that meet that criteria right now. And obviously we have a bigger list of ideas that are in that window as well. So we just talked about Netflix, again, near a breakout level, right? RCL has been in our list, broke out and pausing, right? So there is a bigger list of stocks that have, quote unquote, held the bid and seg, right? So one of the biggest things here, regardless of what happens with the Fed today, regardless of what happens, and by the way, I just want to zoom this in because this is an important thing here today that normally doesn't happen, is the SEP coming out today. That's a really big deal. That's actually going to come out 2 o'clock and then 2:30 where Jerome Powell. The fact that the SEP is coming out today is a really, really big deal. All right. So we have this, right? We have this big, ugly setup where everything is red coming into the day, right? So what you need to do, and actually somebody this morning, where was it? James, sorry, James, let me find your phone. James Cusanos this morning talked about being too busy. You can't be too busy if you're in the market. If you have money in the market, you are a money manager. So James and everybody else on this call, what it takes to successfully navigate the market is you just need to maybe spend 15 minutes to 30 minutes a day saying what's going on in the market and how do I find the best opportunities? What are the best stocks to buy now? And again, if you're a regular viewer of the channel, which I hope you are, if you're not, please do me a favor, hit that subscribe button. You know that everything that we do starts out with this, with the stock market power pyramid. Now, right now, the market's down, right? We're actually down, we're pushing down, and now we're going to be looking at sectors. Sector-specific stuff, as we just showed you, is also getting beat up. So what do we do from there, right? Well, what we have to do now is work our way a little bit higher up the pyramid and either go into groups or stock-specific ideas. So as we start to work our way up the pyramid, that means now that the first thing we're going to do is go into stock specific ideas. So the first thing we're going to do is pull out our minimum viable criteria, which is, let me actually zoom that in a little bit for you. Average true range of $1.50. That's the volatility, and average over 2 million shares per day. So I want a minimum of above the 50 period moving average. And that brings it down to 69 stocks, right? So now we want to make that a little bit stronger. Which stocks have also been strong over the last week for a minimum criteria? And that brings it down to 27 stocks. So at a minimum right now, we filtered out the thousands of stocks on Wall Street, knowing right now that the minimum we want to see is that it has relative strength now with the market actually going down. So now the next step that we want to do as we work our way up through that power pyramid, are there any strong sectors that are dominating this list right now? We want to see, is smart money, our institutions, doing something somewhere specific? Because quite frankly, I like trading to be easy and a lot less stressful. Let's just go follow them if it's obvious. So now we take a little bit deeper look into this list of 27 stocks, and we start to work the sector side of the list a little bit. Consumer cyclical finding bids, and that should not surprise us. We just talked about Wynn. We just talked about Starbucks. We just talked about RCL. So do you see how trading can be as simple or as complicated as you make it? The stock market is giving us feedback and giving us clues all the time. The only thing that we need to do to successfully interact with it is have some sort of structure like this, where we're saying, I'm not going to do anything unless I see well-bid candles, because that's the sign that smart money is paying higher prices or not, right? So if we keep working our way through this list, you can see that consumer cyclical has had some buying pressure. Certain types of energy stocks have had some buying pressure. Morgan Stanley and Schwab have been pretty strong. Sava in healthcare, which that's something we're going to talk about in a second. Sava yesterday finally broke through this 32 level. You can see it's pulling back a little bit, but had a big explosion, which, by the way, some of the best sectors traditionally, when the market is going down and in a bearish mindset, especially when inflation is higher and interest rates are going up, the typically strongest groups that have relative strength and less selling are typically what's known as consumer defensive, which is stuff like Walmart, Costco, Pepsi, Coke, that kind of stuff, and healthcare. Regardless of what's going on in the world at that time, everybody has to take care of themselves. So healthcare, you get Johnson & Johnson, Procter & Gamble, all of those kind of things. Even Eli Lilly had some relative strength recently. So we're going to combine those two lists of the best stocks that are performing now, in addition to the consumer defensive and healthcare groups, to see if there's anything that is showing what we call signs of life that would give us attention. Just going to stop here. AMD is still bearish in our community right now. AMD and NVIDIA actually still in bearish. Matter of fact, it's resting right at a support level right now, and that's actually a bear flag with a lot of room to go to the downside if we actually bring that out over here. You can see that we are perilously sitting right at a support level. So, Joseph, if you're looking to trade AMD right now, it's really bottom fishing, and you're basically hoping that support holds. There's two setups right now in AMD. We're either going to get a short covering rally because this massive support level actually is holding. And you can see this is going all the way back into September of 2020. If this cracks, oh my word, there's a lot of room below that level. Probably down here is the next level where buyers stepped up and actually did something significant, which looks like it's right around 57, 58. So almost $20 lower from that point, right? So anyway, AMD has some room to the downside. So that's the first part of the equation. But I want to finish up what we're just talking about with sector rotation and looking at that list. So this is the first group of stocks. You can see Cigna actually holding the bid up there, right there, and actually hanging on. So Ernesto, I've already given you about 5 different stocks. So got to write those down as we're going along them. So Cigna as well. Let's finish up this list here and see what's on the other side. And really nothing dominating right there from a perspective of a bigger picture. The one thing I do want to point out are these guys right here. So CF, Mosaic, and NTR. Let's actually take a look at those guys right now. CF had a monster day 2 days ago. You could actually see it's up again this morning. Mosaic, Also, well, inside day and also up this morning, and NTR. So the point that I want to get across here, right? This is a very, very big point. A lot of people are going to be scared right now. A lot of people are going to be looking at the stock market right now and they're going to be saying, oh my gosh, everything's crashing. There's nothing to do. And I'm afraid that if it keeps going down, my portfolio is going to go down. Well, there's something that's interesting. It's called hedging. When the market is actually going up, sometimes you protect your portfolio in the other direction, which is known as hedging, where you would short sell weak stocks while the market's going up as a hedge against your long positions. In this case, we're actually talking about, we've just found 27 stocks that meet the criteria as buying pressure that we can absolutely take a look at and jump into those ideas. Now, what's kind of cool is I want to tie back this well bid and look at some of the ideas that we actually just called out on the daily chart. So you can actually see here now, NTR is well bid. It's got higher highs and higher lows. If we take a look at Mosaic, it's actually inside candle, but it's up $1.19, so it's going to go well bid. And it's actually well bid right here, and CF, well bid. So you kind of see how this higher highs, higher lows is tying in with this, which is relative strength to the market. So what we're doing right now, which is kind of fun, we're just putting the pieces together of if the market goes down. We started today talking about exhaustion and how to recognize when selling pressure or buying pressure is done. So we're looking for right now over the next 3 to 7 days, how to recognize exhaustion or when selling pressure slows down in strong stocks to take a look at for when they go up, right? So we want them to bottom out, be strong already, and then look for bids. But what we're doing right now in this list of stocks is we've already talked about and just came up with a big list of stocks that already has buying pressure. So one of the most important things here is to recognize, is it obvious and is it still valid? So right now the market's going down. That's still obvious, right? But there are stocks that are strong right now while the market's going down. So the stock market language for that is relative strength. So I'm just going to actually zoom this in a little bit more. You might want to take a screenshot of that. These are the stocks that have relative strength. And quite honestly, it's not a coincidence that those stocks are the ones that we've been trading reliably in our community for a very obvious reason. Make trading easier. Make the stock market as easy as possible. And just say, where does smart money have attention? That's where we should have our attention. And the way to do that, again, I'll just show you how we do it on a daily basis, is to have some sort of process where you are tracking and following sector rotation from one day to the next and spotting where is the relative strength while the stock market is seeing some selling pressure. So hopefully we're putting the pieces together for you. You know that FOMC is going to come out today. There's a little bit more news on top of that. The S&P is coming out as well. You also have some earnings today, and there's one group of stocks that are very interesting right now, which is the home builder stocks. And we have earnings coming out today in Lennar and KBH. You can see that these are clearly still have selling pressure, but the big thing over here is it's having a hard time at this 26 level. So now if you start to put the pieces together in the home builder sectors, what are you reading about interest rates right now? Interest rates are going higher. Interest rates, mortgages, right? Interest rates going up, higher mortgages. Mortgages right now are double from last year. So what we're kind of doing now is we're putting the pieces together for something that's not necessarily technical on the charts. We're not so much doing technical analysis on these charts. We're like, well, interest rates are going up. That's the whole focus of today. Jerome Powell, interest rates going up, right? Question how much. They're going to keep raising interest rates. Well, what do you think is going to happen to these home builder stocks over the next 3 to 6 months based on interest rates going up, inflation going up, inventory and people trying to sell their houses, the prices are coming down? What do you think is going to happen to these guys that are reporting earnings today? So that's another catalyst to pay attention to. One of the things we're looking at every day are stocks in play. Which stocks are in play? Which stocks will have smart money attention? And earnings, obviously, a big deal. So you have interest rates, earnings coming out in these home builder stocks. You should be making a list of home builder stocks to see if there's some short-term ideas in there for you today as well. All right. My gosh, there's a lot to talk. I'm actually sweating. I'm so excited. I can't wait to trade today. So if we covered some stuff that was new to you today, definitely click back and watch it, because the stuff on the candlesticks, and I'll actually give you a little bit of a heads up just to walk you through if you want to go through these a little bit. So the only two candlesticks that matter, there's energy candlesticks and there's indecision candlesticks, right? Melted candlesticks. And you get an idea, melted candlesticks represent a small body, which means indecision. Energy candlestick is where the smart money is most likely committing capital. So if our job is to follow the smart money, doesn't it make sense that we are trading when we see energy candlesticks and staying away from when we see indecision? That's a big thing to keep an eye on as well. Like that in a heartbeat, you should now be able to look at any chart. We'll actually go back over to the charts. You should be able to look at any chart right now quickly and say, am I seeing a bunch of melted candles? Actually Ribbon, probably one of the best recent examples about that, is we had a bunch of melted candles, right? Let's go right back over there. A bunch of melted candles, which has no conviction. Ooh, actually, let me get back over that to that chart right here. Bunch of melted candles, small body candles, followed by energy, followed by indecision, followed by energy. So this is kind of interesting. We're actually going to see if Ribbon finds a bid today, looking for it to rally, which it looks like it is. Whew. We covered a lot of stuff today. So what's the bottom line? The bottom line is if you spent the last few days preserving precious capital and what we call trading for momentum, you're going to be in great position to capitalize on the stuff that we talked about over the next week or so. Looking for exhaustion, for selling pressure to slow down or end. We gave you an example today for the last 5 days of buying pressure in WIN stock, WYNN, that 5 days of buying pressure slowed down. We showed you how we spotted when it reversed. And actually, if we could kind of finish on that chart, it's kind of fun where we had this buying pressure, and then intraday yesterday, we saw this, and that spike, which is after 5 days of buying, led to the stock pulling back over $3, which is kind of fun. So if this kind of stuff is new to you, please do me a favor. We do this all the time. Just click that subscribe button, hit the like button if we did a good job today. But this is where trading can become a lot more fun because now it's in your control because you're not looking at everything. You're looking for these specific things that we're talking about right now. You're like, we're putting the pieces together. What does price action look like? What does volume look like? Is it obvious? How do I know when it reversed? This is where, you can't wait to wake up and look at the stock market. So if we did a good job today for you, please do me a favor. Go have an awesome day. Click subscribe, and I'll see you later. Have a great day trading. I'll speak to you soon.